news rant for this month. This month I want to be talking about the freehold market, and before I jump into that, I want to talk about the condo market. Last month I talked about it. The market was soft. The market's still soft. I'm seeing a little bit more activity after the vaccine news, but there's lots of inventory. There are deals to be had, and the concerning part to me, like I mentioned last year, is the rent. Rents are down 20-25%. Landlords are desperate. Some people can't afford to keep their places, so you can find deals in that market. So what's happening in freehold market? Freehold market from October last year to October this year in the 905 area increased 50-20%. And in the 416 it was last 5-10%. And let me just say freehold. When I say freehold, I mean detached, semi-detached, and townhomes. So what has been going on? Let me tell you. Have you ever been to Best Buy on a Boxing Day? Have you felt that pushing and shoving for that deal? That big TV that everyone's fighting for? That's what's happening in the 905 area for homes, detached homes less than $1 million. There's just pushing and shoving. There are offers, bidding wars. Every house has 10, 20 offers on it. It's mayhem. It's crazy. And to think that top economists during the pandemic have been saying that prices are going to decrease 10-20%. They're nuts. It's not even close to that. There's no inventory. So what's going on? Let me speak to you this way. There's demand and there's supply. Let's talk about demand. So on the demand side, there are people during the pandemic. They're working from home. They need more space. So they're valuing that home a lot more than they did before. And they don't want to live in a tiny condo that before it was okay because they were just putting their head down to sleep and they didn't care if it was livable. Then now they need a livable space because they're home all the time. So a lot of condo would-be buyers, they're buying freehold. They want space. And before they used to buy a condo for 800,000, 900,000, now they want to buy a house for 800, 900,000. But they don't exist inside the city. It's not a core city. They need to go to the suburbia like Ajax, Brampton, Newmarket, Aurora, Markham, wherever they can find cheap house for more space. Fuel on the fire. The fuel is a low interest rate. You're getting ultra low interest rate at 2%. So people are fighting. They just want to lock in that cheap rate. Let's talk about the supply. Let's think about it. You have got $1 million home, and there's this pandemic going on that's killing people. Are you feeling comfortable to have random people parading through your house through the sale process? A lot of people are not, and that's why you don't have enough listings. There's very little listings. There's a lot of fight for space, so that's why you got a bidding war going on, and that's what I think some of the economists didn't anticipate. So what's when I talk about bidding wars, what am I talking about? I'm talking about low price homes, entry level price points below 1.2 million. Because think about it, like a typical couple, each make 100,000, let's say. Let's say together they make 200,000. They go to their mortgage advisor and he says, I can qualify you for a mortgage from 800,000 to $1 million. And so they go shop for $1 million home. And nothing more. And that's the funnel every single couple or every family goes through to buy a house. And that's why the prices have gone up so much that anything above 1.2 million, 1.5 million dollars, they're not affordable for many. So activity is not to the same level for those kind of homes than it is for the cheaper homes, the entry level point homes. So I'm sure you've heard there's a lot of money printing going on this year because of the pandemic. The stimulus and everything. Everybody loves it. So what happens when there's more money printed? So basically, I wanted to track the amount of money in the system versus home prices and the TSX, and this is what it represents. Basically, the M2 money supply is measured is a measurement of how much money is in the economy that can be invested in assets. So when governments print money, and after the multiplier effect through credit, that's what you get the M2. And when you track M2 with the home prices, you see M2 from 2005 has been growing at 8.2%. And home prices have been close, like 6.5%, 7.5%, based on what kind of index you're looking at. And the TSX has been lagging behind. That's just because we have a commodity-based industry, such as precious metals and oil, and that has not been doing that well. Basically, typically, government prints more money, prices rise. This is just a simple math, right? So, but I want you to look at the end of the chart. You see how that the M2 money supply has just ratcheted up at the end? And home prices have not really picked up with the M2 money, and I anticipate it will. Let's go to the next chart. You see from October last year to September this year, this is what we have data for the M2 money supply so far. M2 money supply has increased by 17%. So your money has been diluted by almost 17%, and home prices have increased, but not as much. But basically, your government is diluting your cash because they don't have money, and home prices are increasing. So people think it's the home that's increasing in price, but I think you need to think about it the other way. It's your money being worth less, and that's why you need to pay more of it to pay for that same home. So do I think the prices are going to crash? You know, there are absolutely zero signs of the market crashing, at least in the freehold market. And with the continuous money printing that's going on during the pandemic, you know, you have a pretty good chance of getting priced out of the market. I took the time to prepare for you 4 good deals that I think are absolutely to be had. But I want to only go through the semi-detached ones at Richmond Hill. Let's go walk through it together and why I like this deal. So you lock in a semi-detached at Richmond Hill for $840,000. You know, the home has 3 bedrooms upstairs, 1 bath upstairs, 2 bedrooms downstairs, and a bath in the basement. And you can rent out the basement obviously separately. That's why I like it. You lock in a mortgage with 20% down, 2.2% interest rate with 30-year AM. That's the typical mortgage you can get these days. And equity required, you do the math, you need around $180,000 all in to close the home. And you do the monthly cash flow. You know, you rent upstairs for 2,200 main floor and 1,300 the basement. And you do the math, you're getting positive cash flow of $350. This is an amazing monthly cash flow for freehold. Do the math for any other home, like most are running at negative cash flow. So when we look at the investment summary, let's say you hold it for 5 years and home appreciates at 5% per year. You know, in the past decade and a half or 2 decades, it's been increasing over 10% each year. And you get a return on 31% return on investment. On a risk-adjusted basis, you can't go wrong. These are pretty good investments you can make. These case studies for you, go through it. The listings are on a different link. And if you have any questions, do let me know. And that's a wrap for today. So as always, you want to talk real estate, you better call Adam. Thank you.